Hey everybody, this is Joshua Sherman, Realtor with Realty Group at RE/MAX Trinity, and today I'm going to be walking you through the home buying process step by step and through the lens of buying a home in 2022, which, if you haven't heard anything about the market out there, it's pretty crazy. But so long as you have a plan and you know how to navigate through this market, you will be able to purchase a home in 2022. We have a lot to cover, so let's jump into it. The first thing that you're going to do in order to purchase a home in the year 2022 is to sit down and do a full financial review for yourself. That's step number one, doing a full financial review. You want to make sure that you have enough money in savings to cover your down payment, your closing costs, and a little bit on top to play with. You'll also want to make sure that you have enough to cover any other miscellaneous costs associated with purchasing a home. Things like inspection fees, appraisal fees, escrow fees, etc., etc. And then later, when you are able to move into your new home, things like buying boxes and packing supplies, hiring a moving company, and other fees associated with moving, such as setting up new utilities. With all of that in mind, you also want to make sure that you're not dipping into your emergency fund. You don't want to be throwing everything that you own into the purchase of your home. You need a little bit of cushion just in case of emergencies. If you're used to working with a budget, this step is going to be pretty easy for you because you're going to have your monthly expenses already lined out for you on your app, your spreadsheet, your website, or whatever you choose to keep your budget on. If you currently don't have a budget or you budget using only your mind, go ahead and hit that subscribe button. I'm going to be doing a budgeting and savings series on this channel focusing on first-time home buyers and new investors. That'll be a great resource to teach you how to put everything down on paper or on a spreadsheet to help you with your overall financial health. You have two goals for doing this full financial review. The first is to be able to pinpoint exactly where you want your monthly mortgage payment to be. Having this number in mind and on paper is going to be a huge help later on. Now, it's recommended that your mortgage is about a third of your monthly income, or around 33%. However, dedicating a full 33% of your monthly income may not be reasonable for your budget, depending on your desired lifestyle and the ever-rising cost of living. You may need to have that number closer to 28% or 25% of your monthly income, but that's why we're taking the time to do this full financial review. That way, you know exactly where that number needs to be. To get this number, you're going to be taking your monthly income and subtracting from it your monthly expenses. First, you're going to be taking care of your debts. Car payments, student loan payments, credit card payments, or any other loans that you make payments on monthly. Then you're going to subtract the essentials from that remaining number. Savings, always pay yourself first. Electricity, water, trash, sewage, gas, internet, phone bill, insurance, and your average food or grocery bill. Now, you could go a step further here and subtract any subscriptions or monthly services that you would be unwilling to give up to maintain your current lifestyle, but whatever is left at this point, you get to decide how much you would like to dedicate to a monthly payment. And that is your desired monthly mortgage payment. Go ahead and write that down because we'll be coming back to it later. The second goal for doing this full financial review is to look at the amount of money that you have in your reserves for your home purchase. Now remember, you don't want to be dipping into your emergency fund. Having that cushion is vital for your financial health. The rule of thumb here is to have in your reserves at least 3 months worth of monthly expenses on the lower end and 6 months worth of monthly expenses on the upper end. So setting that aside, how much money does that leave you to spend on your moving costs, your closing costs, and your down payment? Now, there's a fairly huge misconception when it comes to just how much people believe they need to put down on a down payment. And if you're a first-time home buyer, that number can sound pretty scary. You've probably heard it before. You absolutely need a 20% down payment in order to purchase a home. But that's simply not true. There are a ton of loan types out there that offer as little as 3% in a down payment, and that can make a huge difference. Let me give you an example. For simplicity's sake, let's say that you're purchasing a home for $300,000. Now, following that popular misconception that you absolutely need a full 20% down payment in order to purchase this home, that means your out-of-pocket expense for your down payment is $60,000. However, by utilizing the many loan types that are out there and available to buyers of all walks of life, including first-time home buyers, this home can become a lot more affordable to get into. Let's say that you get qualified for a home loan that requires a 3% down payment instead. Now you're looking at only paying $9,000 as your down payment. That is $51,000 in your pocket by going with that loan type. And paying $9,000 instead of a full $60,000 is much more manageable when you're a first-time home buyer. There are also down payment assistance programs and programs for first-time home buyers that help cover the cost of the closing costs and the down payment. There are options out there for everyone that don't require a full 20% down. Now, for all of you investor or finance heads out there who want to capitalize on that lower monthly payment, I do have to say that putting a full 20% down does have its own benefits. One of them being is that with a full 20% down, you don't have to cover what's called mortgage insurance, which adds to your monthly expense. Another advantage of putting a full 20% down is that when you use a higher down payment, you often receive a lower interest rate, which is one of the things that makes up your monthly mortgage payment. I could do a whole video on down payments and different loan types, and I probably will, so be on the lookout for that. However, for the majority of people who are looking to get out of the rental market and into owning their own home, putting less than 20% down is advantageous, especially if you have limited funds at your disposal, because in this market, you're going to need to use those funds, and you'll need to use them wisely. 2022 is starting off with historically low inventory and a continued high buyer demand, which means that there are a lot of buyers competing for the same property. That means you'll be competing against highly competitive offers, and that leads to offering over the list price. In most areas in Tarrant County, we're seeing homes sell over the list price by an average of 2% to 5%. In the last 30 days from making this video, the highest a home sold in the area was by 34%. Now, that's not the norm, but those types of offers are out there and the types of offers that you could be competing against. Having a little extra funds saved up or freed up by using a loan that offers a lower down payment is going to be critical in helping you be more competitive with your offers. In addition to your down payment and a little extra money saved up to be more competitive in this market, you're going to need to cover closing costs. Closing costs are fees associated with closing and the transfer of the property from the previous owners to you. This could include lender's fees, homeowner's insurance premiums, prorated tax amounts, courier fees, recording fees, lawyer's fees, title fees, etc., etc., etc. You'll get a full breakdown of the closing costs from your lender prior to closing, but generally you can expect to pay anywhere between 3% to 6% of the total sales price of the home in closing costs. Now let's take a little breather and do a quick recap because that was a lot of information at once. You're going to need between a 3% and a 20% down payment, depending on the type of loan that you can get qualified for, a little bit of extra money in reserves to be a little bit more competitive in this market, and around 3% to 6% in closing costs. By sitting down and doing this full financial review for yourself, you should have an idea of how much money you need to have in your reserves to cover all of those expenses, while still maintaining an emergency fund. And you should have a number in mind for your desired monthly mortgage payment. Once you've accomplished that step, it's time to move on to step number 2, meeting a realtor for a buyer's consultation. You may be asking yourself, do I really need a realtor in order to buy a home? Well, I've already done a video on that, so be sure to check it out. But yes, hiring a realtor as a buyer is going to greatly increase your chances of finding and getting into a home. And there usually isn't a fee associated with being represented by a realtor as a buyer because our commission is usually paid for by the seller. Now, every realtor's buyer's consultation will be slightly different. I have a proactive process that I use with all of my buyers where we uncover exactly what they're looking for in a home. We split it up into 3 separate categories: needs, wants, and deal breakers. The needs are things that are an absolute must in your future home. Meaning if a home does not have this thing, then you won't entertain it at all. An example of this would be the number of bathrooms. You can say, in my next home, I absolutely need 2 full bathrooms because I'm tired of sharing with everybody else. I feel that. The next are wants. These are things that you would like to have in your next home, but aren't necessary to purchase it. I find that a lot of wants are cosmetic in nature. I would like to have hardwood floors. I would like to have granite countertops. I would like to have a nice decorative front door. These are preferences that we'll try to find in your next home, but it won't be the end of the world if you can't have it right away. And finally, we have deal breakers. These are things that you want to avoid in your future home, and are often things that cannot be changed easily or cheaply. A deal breaker could be a location. You cannot move a house, and an hour commute to work every day could very well be a deal breaker for some. Another could be the number of floors. Some people don't like two-story homes, so that second story of the otherwise perfect home could be a deal breaker. Once we have your needs, wants, and deal breakers list, the next thing that I like to do during my buyer's consultation is to go over expectations. Right now in 2022, we're in a highly competitive seller's market. Inventory is at an all-time low, and there's a lot of buyers who are wanting to take advantage of the low interest rates. On average, our clients are going through 8 to 12 offers before going under contract. I explain to my buyers what's happening in the areas that they're interested in, and then I explain to them what's happening in the market as a whole. Then, after discussing that a little bit more in depth, we take another look at their needs, wants, and deal breakers list just to see if any of those things shift from one category to another. Sometimes a want likes to masquerade as a need until you realize the limited options that a need provides you. After discussing the expectations of the market and revising their list a little bit, I like to break down the home buying process a little more in depth, taking the time to explain each step in greater detail to make sure they understand everything to the fullest extent. I always tell my clients that I want them to be as educated as possible. This is a huge investment, and I want them to feel comfortable every step of the way, and knowledge is the best way to accomplish that. Like I said, a realtor is going to have a different process during their buyer's consultation, how in-depth they go with their client, how it flows, but one thing you're going to hear from every realtor is that you're going to need to be pre-approved for a home loan. Most realtors won't even show a home until their client has a pre-approval in hand, and for good reasons. A pre-approval shows that you are a serious buyer, for one, and you're going to need to include that pre-approval in any of your offers. Otherwise, a seller is not going to consider it. Going through the pre-approval process is also important because it's going to tell you just how much home you can actually afford. Nothing is worse than showing a client a $300,000 home that they absolutely fall in love with just to find out that they are only qualified for $250,000. And this happens every time that I show a client without a pre-approval letter without fail. It sucks because not only have we wasted everyone's time, the sellers, the listing agents, mine, the buyers, but now that buyer is going to compare every future home that they see to that home that they couldn't afford. It saves a lot of headache and a lot of heartache just to get a pre-approval letter before you start looking. Now, a realtor should have a list of trusted lenders that they can recommend to you. And no, I don't recommend certain lenders because I get some kind of kickback or referral fee or payment. That's illegal. I have a list of lenders that I've used in the past and that I have vetted thoroughly. These are lenders who have helped multiple clients and who have had great success. I know and I trust that they are up to date on their lending practices, that they know the different types of programs that are available to my buyers, and that they can overcome any hurdle thrown their way so that we can all make it to the closing table, which is everyone's goal. And that segues into step number 3, get pre-approved. After your meeting with the realtor, talk to the recommended lenders to get pre-approved for your home loan. A lender is going to look into your finances pretty in-depthly. They'll look into your W-2s or 1099s, your monthly pay stubs, your bank statements, your credit score, your debt to monthly income ratio. And once they have all that documentation, they're going to go through everything and come up with just how much home you can afford. And oftentimes it's for a lot more than what you were expecting. And that is when your full financial review comes back into play. You're already going to have an idea of how much money you can spend a month. You can tell the lender, this is my desired monthly mortgage payment. This is what fits within my budget and I want to stay at this number or below it. They'll be able to match you to the home loan that's going to fit within your budget and with how much money you have in your reserves. They'll issue you your pre-approval letter, send a copy of it to the realtor that you're working with, and now you're ready to shop as a serious buyer. That pre-approval letter lasts for about 60 to 90 days, depending on the lender, and then after that time is up, you'll have to get another one, which means time is of the essence in this next step. That is when the fun really begins, because now we're headed into step number 4, finding your perfect home. In this market, homes are going quickly, like really quickly, like within a matter of days quickly. So as soon as we find a home that matches the criteria that we went over in our buyer's consultation, we're going to schedule a viewing for that home and see it in person. We'll continue to see properties that match that criteria until we find the home that clicks, the one that makes you think, this is my home. You could be on this step for a long time or for a very short period of time. It really depends on the client. I've had clients that absolutely loved the first home that we saw, and I've had clients who have seen upwards of 20 homes and we still haven't found the one. On average though, this step takes about 20 to 30 days roughly. But it really just depends on what you're looking for in a home compared to what's currently on the market, and how willing you are to review and revise your needs, wants, and deal breakers list. Once you find that perfect home, however, then we move on to the next step. Step number 5, putting in an offer. You're going to work with your realtor on this step to find out what you'll be offering on the home. I personally do a CMA or a comparative market analysis on the home to make sure that the list price is close to what the home is actually worth. I also pull the sold data from the neighborhood to get an idea of the local market trends for that specific subdivision. I present all of this information to my client and then help them formulate a competitive offer that's going to be strong enough to stand a chance in this market, but still in line with what the data suggests. And of course, in line with how the buyer feels about the home. Once your offer is submitted, there are 3 things that can happen to it. The first thing that can happen is that the sellers reject your offer or select another offer. If that happens, don't panic. You may think to yourself, oh no, this was my dream home, nothing will ever compare to it, all is lost. I've heard it all. But in my experience, the perfect home is right around the corner. Just hang in there, keep an open mind, and keep submitting offers. Whenever an offer is rejected, I usually reach out to the listing agent to see if they can give us any feedback on our offer. That way we can see what we can improve on next time. If you're submitting several offers and they keep on getting rejected, it's going to be frustrating and it's going to be infuriating. Just know that that is part of the process right now. Remember, this is a highly competitive market. Our clients are submitting 8 to 12 offers before going under contract, but they're still going under contract and with homes that they love. Just hang in there. The second thing that can happen to your offer after you submit it is a counter offer from the sellers. We're not seeing much of this in 2022, but it's still a possibility. This means that the sellers are entertaining your offer, but they want a couple of terms in the contract to change before signing and accepting it. But right now, when everyone is calling for highest and best, the seller is going to assume that the offer you submitted is your highest and your best offer. They most likely won't take the time to counter your offer because they're going to have 15 to 20 other offers on the table to choose from. Now, the last thing that can happen to your offer is the one that you want to happen, and that is the sellers accept it, which is great. That means you're officially under contract and one step closer to becoming a homeowner. And that brings us to the next step. Step number 6, home inspections. Once you're under contract, you usually have 5 to 10 days of what's called an option period. This is a period of time where you can back out of the contract for whatever reason without much penalty. This is your time to do your inspections. Now, I recommend all my clients that they have a home inspection, even if it's a new build. You want to know what you're purchasing, and you want to have all of the systems of the home evaluated, just in case. If something major comes up in the inspections, this is the time to walk away, if you want to. Yes, you will lose out on your inspection costs and your option fee, but that's a small price to pay for peace of mind. This is also the time to negotiate with a seller if need be. If something major does come up in the inspection that the buyer and the seller knew nothing about before signing the contract, you have some leverage in saying, hey, seller, let's address this issue before moving forward. If not, I'm out. And then both of us can start this process over again from square one. Everything in real estate is negotiable. So long as you finish those negotiations or back out of the contract before that option period ends, you'll be fine. And you'll be prepared to continue on with your home search, having more knowledge and experience. Now, once you're under contract, have completed all of your home inspections, and have finished up any further negotiations with the sellers, you're on to the next step. Step number 7, underwriting. This is a step where your lender is going to finish up processing your loan. They're going to lock in your interest rate and run your credit one last time to make sure nothing has changed. For the love of all things holy, If you are in the process of buying a home, do not switch jobs. Do not finance a car, do not finance new furniture or appliances, or buy anything on credit. I've heard horror stories from other realtors whose clients were so excited about purchasing a home that they went on a shopping spree and bought all new furniture on their credit. And because they took on new debts, it shifted around their debt-to-income ratio, which was already on the cusp, and they were denied their home loan in the final hour. Yeah, don't do that. Just wait until the home purchase is fully funded before making any big purchases or major life changes. During this step, the lender is also going to evaluate the home to make sure it's worth the amount of money they're going to lend to you. This is done via a home appraisal. This is what usually takes the longest during a standard real estate transaction. It usually takes an appraiser a couple of weeks before going out to the home to perform the home appraisal, and it takes about a week or so for them to write up the report and get it back into the lender. But once they do, they'll send the file back into underwriting to make sure that the home meets value and checks all their boxes. Once they have all of that processed, they'll issue what's called a clear to close. 3 words that realtors love to hear, because that means we're finally on the step that everybody is excited about. Step number 8. Closing. We schedule out a time on the closing date where you will meet the escrow officer to finalize the purchase of your home. This appointment lasts for about 45 minutes to an hour, and it's a lot of signing, a lot of initials, and a lot of documents to go through. But once you power through and do some carpal tunnel exercises, you'll be done. That's it! You did it! We'll take celebratory pictures for making it through this hectic process, and as we celebrate, the lender is going to be wiring the necessary funds to the title company to be distributed. Once we're fully funded, you'll receive your keys and ta-da! You're officially homeowners! You did it! You're done! The whole process from contract to close takes about 21 to 30 days, depending on how fast the appraisal happens and how quickly everything takes to process. But that 30 days generally goes by really fast. And it's usually an emotional roller coaster with many ups and many downs. But in the end, it'll be worth that wild ride because you'll become homeowners. You'll have purchased one of the best investments you can make in a lifetime. And your overall financial health will be better off because of it. Congratulations, you've nearly made it to the end of the video and you've unlocked the secret step. Step number 9, after closing. What happens after closing is completely up to you. You can redecorate, you can remodel, you can repaint. The sky's the limit because this home is completely yours. You can do with it what you want. Just know that if you ever need anything or a recommendation for a particular home project, reach out to your realtor. We usually have a huge list of people, from landscapers to granite and countertop guys to handymen, you name it. We are good people to know to get home projects completed. I like to stay in touch with my clients well after closing because not only did we just go through this huge emotional journey together, we have that bond, but I want to be there for them in case they need anything in real estate. That way, if they have questions or need a particular service, they know who to go to. I hope you enjoyed walking through the home buying process with me. If you have questions about any of these steps or want more information about the specifics of buying a home, make sure to leave a comment below. If you're in the DFW area and are wanting to buy a home this year, let's connect. I'd love to help you navigate this crazy market and get you into a new home. If you're out of state but still would like to meet with a realtor, go ahead and reach out to me with what state and city you're in. I know several RE/MAX agents all over the world who would love to help you realize your real estate goals. If you like this video, make sure to like, comment, and subscribe. And please be sure to share this video with somebody who's looking to purchase a home in 2022. We'll see you in the next one. And remember, at KC Realty Group, we're opening doors for you and yours.